We think of Japanese investors as being huge holders of treasuries, but that's changing.
Yes, definitely. So for the past 3 years, Japanese investors have really been rotating out of U.S. treasuries in favor of corporate bonds, U.S. stocks, agency debt, basically everything except U.S. treasuries.
Now, we look at treasuries as being relatively high yielding relative to Japanese government bonds. So in theory, there would be a big rates pickup. But as you know, there's the cost to hedge the currency risk eats up a lot of that. So walk us through the calculation a little bit there.
Yes, definitely. This is a story all about sky-high currency hedging costs. So the yield on unhedged 10-year treasuries is about 2.83%, give or take. For yen-based investors who protect themselves against currency swings, that yield whittles down to about 0.3%. So definitely not as attractive.
So the key thing here, though, is that the turn away from U.S. treasuries is not actually a turn away from the U.S.
No, not at all. They're actually piling into other U.S. assets at a record pace. Their holdings of corporates, U.S. stocks, agencies exceeded $1 trillion this year for the first time ever. So they're clearly loving the U.S.
And is this just about looking for return? Is it something of a change to the nature of what the approach is? What's the reason for this shift?
Sure. So it definitely speaks to a sea change in Japanese investing. Japanese investors are a historically risk-averse investor base, so they tend to prefer U.S. assets when they look abroad. But they've been pushed further up the risk spectrum as hedging costs have become somewhat prohibitive.
So to some extent, this is a story that we see all around the world of people perceiving, not a lot of return anywhere on perfectly safe assets. So people feel the need to be pushed out the risk curve.
Yes, it definitely speaks to that. And these Japanese investors are having to raise their risk profile just as concern starts to emerge in some of these other markets, specifically the U.S. stock market.
Now, when we talk about Japanese investors or any investors, of course, they're not a monolith. There are discretionary investors, there are institutional investors, big funds, insurance companies. What type of investors are we talking about within the Japanese market?
Sure. So this treasury data that I'm looking at, this encompasses a wide swath of investors, everything from the Bank of Japan to, Japanese insurers and pension funds. So really a broad,
A broad range of potential buyers of assets. When you talk to people looking, do they see the forces that have caused this rotation over the last few years? Is there any suggestion that it's going to abate anytime soon, or do people see this continuing to go on?
That really depends on your view of U.S. yield. So a number of things go into currency hedging costs. Among them are LIBOR, cross-currency basis swaps, and of course the yield of the underlying asset.
Right.
So at this point in time, U.S. Treasury yields haven't risen high enough, even though they've been rising all year. They haven't yet risen high enough to overcome that hedging cost. So if you think U.S. yields are going higher, perhaps they'll get to a point to...
That would be the key thing.
Yes.